Good day and welcome to this edition of Nutrify Today, Boardroom Series. And this is the Indo-American edition, the Indo-US edition, brought to you by Nutrify Today, Industry Transparency Center, and WholeFoods Magazine. Today, for this issue, I'm here with William Hood, the founding partner and the CEO of William Hood & Company. William, welcome. Glad to have you with me.
Len, thank you. Always great to chat with you too.
Excellent. Let's start by going a little bit into some of your background and evolution. How did you come to be in the finance universe, and how did you come across the NutriSpace?
Len, that's usually better served over a glass of brandy, but let's try and do it together today. My background's less conventional for what people would describe today as a finance bro. I was a double literature major at university. I studied English and French literature at Georgetown, and I did a minor in business just for insurance purposes in case I wanted to have a more conventional life. I always wanted to be a writer or a journalist, and that conflicted with wanting to raise a family and have a good life. When it came to senior year, I jumped on the bandwagon of the Wall Street recruiting and went up to Wall Street as an investment banking analyst, and that was almost 28 years ago. I haven't looked back. I've been an investment banker for those 28 years. The vast majority of it, 95% plus, has been focused on the consumer products industry, and within that, most of it has been focused on consumer health and wellness, broadly defined OTC, but certainly over the last 10 to 15 years, more on the preventative side, nutrition and vitamin, minerals and supplements, nutraceuticals, up and down the supply chain, ingredients, co-manufacturers and brands. I worked for other organizations until 2017 when I decided that it was time to be an entrepreneur myself, and I founded William Hood & Company with my co-founder Jill Stibe and my other partner Greg Horn. And so we've been in business nearly 8 years as our own firm. William Hood & Company is a boutique investment bank. We specialize in consumer health and wellness, broadly defined, and we have a power alley in nutraceuticals. We're known in the US and globally as a leading thought leader and mergers and acquisitions advisor, investor advisor for the nutraceutical space.
Excellent. I love the term power alley. I think it's extremely descriptive and very appropriate, certainly as I've watched your evolution over the course of the past couple of years. What's the most exciting aspect in the last 9 years since you've been part of that entrepreneurial environment? What's the most exciting that you've been personally a part of? If you could just sort of capture one or two of those things.
No, that's great. And there's a broad theme, first of all, Len. Just being a part of an industry that is incredibly dynamic at this time. If you think about consumer health, on the one hand, you've got OTC, which is relief. It's governed by monograph in the United States. You need to go to the government and get permission for a new ingredient, or you need to fit within one of the pre-existing ingredients. And then on the other side, you've got prevention and vitamins, minerals and supplements, nutraceuticals, functional food and beverage, which is all about healthy lifestyle and preventing chronic illnesses, etc. Living on the prevention side has been incredibly exciting. We've had what we describe as a demographic evolution, moving from baby boomers. A lot of the industry grew up with the baby boomers, as you know, from 1990 to call it about 2010, and it's moved down to initially Gen X, although sometimes it feels like it jumped Gen X, but to millennials and Gen Z. And millennials and Gen Z have done more to influence consumer preferences in the sector and to grow the sector over the last 10 to 15 years than any other demographic. So that's a demographic evolution. And then you've had a digital revolution that's impacted the way that people search for, read about, educate themselves, and ultimately shop for vitamins, minerals and supplements and other nutraceuticals. It's also the digital revolution that has impacted the way that companies sell the products to these consumers, advertising on TikTok, for example, or Instagram. And just having a front row seat in that evolution has been incredible. And we've been very fortunate to represent a number of the brands that grew up from literally zero to some of them are approaching $1 billion in revenue now. And watching that happen over a 10-year period, we were representing them after 3 or 4 years, in some cases 7 years after they were founded. Brands like Liquid IV, we sold it when it was doing approximately 100 million of revenue, and it's $1 billion is within sight now, and Unilever's taken it globally. Ollie's another brand we represented that is over $500 million today, and also in international markets thanks to what Unilever's done. Australia disruptive brand Boost, which we sold to Procter & Gamble, and the list goes on. And so having a front row seat through this dynamic time, having the dialogue with the large corporates, with the capital providers, and with the entrepreneurs has been really exciting, Len.
And I guess even 15, 20 years ago, most of the deal flow was these startup family companies, legacy companies in the industry that would have evolved over that 20, 25-year period. You're reflecting sort of this new spirit, new generation founder. I guess there's a different culture in what they're looking for in exit strategies, and also the partners that they're seeking too.
That's correct, Len. The whole idea of building a business to hand down to your children was, we don't see that much anymore. 95% of the business owners that we talk to today are building these businesses to sell them, have a liquidity event, and go and do something else with that capital. Most of the time they want to go and have more impact in the world and do good in the world, which we love, and we love being one of the enablers of that for them. But yes, prior to about 2010, a lot of the mergers and acquisitions was driven by, I call them baby boomer brands. I don't mean that in a derogatory sense, but if you compare the logos of the brands pre-2010 and the logos post, you get the idea. But the M&A activity was around some of those older brands pre-2010 that grew up, many of them entrepreneur and family built as well. And they were being sold. There were much fewer buyers back then, obviously. The whole, what I spoke about with the demographic evolution and the digital revolution has brought many new corporate and private equity buyers into the field as well.
Yeah, absolutely. So let's talk a little bit about the recent activity. You've referenced a couple of the deals, but recent activity and deal flow, maybe focusing on a few that are really important for understanding the international opportunities. And has there been anything on your radar that has been specifically Indo-American?
Indo-American is very interesting. Look, you have to think about the Indian nutraceutical industry, I believe, in two ways. One is business to business. And so that is India producing certain ingredients that Americans love in their nutraceuticals. I'm thinking about turmeric, and I'm thinking about ashwagandha. India plays a phenomenal role in feeding the world's largest market for nutraceuticals, the US, with these ingredients. India also has a legacy pharma manufacturing base that is enormous. And so there is already this DNA in India of producing for other countries when it comes to healthcare products, and that can travel to nutraceuticals from ingredients and manufacturing. So that's the business to business side. What really excites me, Len, honestly, is the potential size of the consumer market in India. India is the largest country in the world by population. It surpassed China in 2023. It has 1.5 billion people today. That is 4.2 times the number of people in the United States. The nutraceutical industry in the United States is about $65 to $70 billion today, depending on the data you look at. If you think that India is 4 times that, you could see an industry that's 250 billion plus at maturity. And so there's a tremendous business to consumer opportunity, branded opportunity in India today. And I think you're going to see transactions across both sides. And just to give you an example, TA Associates, a very reputable private equity firm, in 2023, they acquired a majority equity stake in OmniActive Technologies, which, as you know, is an ingredients company based in India that sells a lot of ingredients to the US and other countries. On the branded side, back in 2014, you saw Aurobindo acquire Natrol. They've since sold it. Very interestingly, you recently saw a joint venture between Nestle and a local company. I have it here. It is a joint venture to explore Nestle Health Sciences with a local company to explore the consumer market in India for nutraceuticals.
Got it. We do consumer research at ITC, and one of the things that we have found in the domestic market looks to be sort of a bifurcating of the market. There is a commodity type of marketplace on the finished product side, but there's also a Western affluent marketplace as well. Does that jive with what you've seen, heard, read? It seems to be from our consumer research. Just want to know whether you think that's the case as well.
In the Indian market?
In the Indian market, yes.
Yes, I believe that's the case. And we saw that in China as well, to be honest, Len, as China was maturing into the world's second largest nutraceutical market, that there are obviously commoditized products that are less expensive, and then there are more westernized products. They can be Western brands have a lot of appeal in countries like China and India, emerging markets for more affluent consumers. And then there are also premium forms starting to appear as well in terms of gummies and other enjoyable formats that are priced at a premium as well. So you're starting to see some of those trends in India too.
And that leads me to my, thanks for verifying. So it leads me to the question about, are there different considerations when thinking about deals that are international? And is the US to India proposition very much different from India to the United States? Or what are some of the consideration sets as you examine potential deals?
Len, it's a really good question. And, deal makers need to be very thoughtful going both ways. So just, starting both ways, it's not financial, but there are cultural implications of transactions. Companies are run differently in the US and in India. There can be different ownership structures, different reporting structures. And so a lot of thought needs to go into, before we buy a company going either way, can we integrate these companies from a cultural perspective? Considerations for Indian companies coming into the US would be cultural. It's a very friendly environment in the US. The regulatory framework is probably the most friendly for nutraceuticals, given DSHEA in the US, so that's quite easy to navigate. The US government does have CFIUS, so they will evaluate transactions when an Indian buyer is looking to purchase an American company, but they're more concerned about topics like defense and agriculture than they are about health and wellness and nutraceuticals. So I wouldn't envisage too many problems there. Coming the other way, I think that Western buyers, American buyers, need to really understand the political system, the political oversight in terms of mergers and acquisitions, the government oversight, and then once you're operating in India, the tax system as well. The Indian government has become more friendly to the nutraceutical industry in recent years. There's a big public policy shift, especially since COVID, towards prevention against chronic disease. There's a recognition that during COVID, that the level of healthcare provided to people with less wealth was not the same as to provided with more wealth. And so the government is really, their eyes have been opened, and they are really pushing more towards prevention and nutraceuticals. So I think that it's going to become easier and easier for Western companies and Western investors to invest in the Indian nutraceutical market. And I think it's a very exciting place to be. Just anecdotally, talking to my friends, private equity folks, companies, there is still caution about it. They're not going headfirst in because of some of the complexities that still exist. But some of the world's largest private equity firms like KKR, like Blackstone and TA Associates have presence in India and are actively looking to do deals in India.
Interesting. And in our sector, are they ready? Are they, what's the level of preparedness? Do you find that they are understanding these nuances and challenges, or is it business as usual and we'll just widen the net? So are our community ready for the challenges?
Len, to be honest, I believe that the Indian nutraceutical market needs to further develop and evolve before we're going to see, a lot of activity coming into India. Today, there are many different numbers for VMS, nutraceuticals broadly defined, but the Indian nutraceutical market is made up of functional food and beverage. That's the large part of it. And VMS is a little bit the little brother to those two. From a channel perspective, half of it is traditional retail and about half is multi-level marketing. And so India still has this legacy of multi-level marketing for distributing nutraceutical products, as have many emerging markets with large rural populations where supply chains are limited and there aren't chain supermarkets everywhere. And so multi-level is a way to get products out into the field. But the market's going to need to evolve. The online market especially is emerging. It's in its infancy. And I think there's tremendous opportunity there. But I do believe that the market will need to evolve beyond multi-level marketing, more into retail, more into digital distribution, and grow. And at the same time, I believe that the government framework will need to be further defined, as will industry standards, to give credibility to the industry before we see a feeding frenzy. But I do believe it's coming. I only see a lot of upside for the nutraceutical industry in India over the next 5-10 years.
Wow, that gives us something to really look forward to, especially as the infrastructure builds out. What are some of the market implications of the current uncertainty, both the economic and geopolitics that are facing us right now this year?
Yeah, and I think to address that, Len, I'd like to go back in history a little bit and talk about M&A generally, globally, in the US, and as it relates to India before we get there. From about 2010 until 2021, we had a great big party in mergers and acquisitions. And the party was fed by stimulus that was poured into the economies all over the world, government stimulus, post the 2008 to 2010 financial crisis. We then had COVID, and so what did the governments do all over the world? They poured more stimulus. It's like a huge cherry on top of a cupcake. And in addition to that stimulus flooding in, interest rates were at historic lows through that whole period. In our world, interest rates equal cost of capital. When cost of capital is low, it's a very simple equation. M&A activity is very high. You don't need to work very hard as a private equity practitioner when the cost of your debt is very, very low. You just sit on companies, you buy them well, and then you sell them well, and you've made money. That party ended on January 1st, 2022. Without realizing it, inflation had crept up from about mid-21, and it surprised us when the numbers came out, and everybody panicked in early 22, and governments all over the world raised interest rates, which was the right thing to do. And so that was the end of the cheap money era. That was the end of the M&A party. And on top of that, industries like the nutraceutical industry also had industry challenges to contend with. The post-COVID challenges for the nutraceutical industry, not just in the US, but all over the world. Sales came down because of the high challenging comps, and then we had supply chain issues. There was too much inventory throughout the supply chain. You remember all of this, Len. And so if you think about M&A psychology, number one, the macro environment's not great, high cost of capital. Number two, do I really want to buy into the industry while it's still trying to figure itself out post-COVID? And so M&A has been softer since the end of 21, but a lot of interesting transactions have still occurred just in our industry. Otsuka, which owns Pharmavite in the US, acquired Bonafide. That was a transaction we were involved with. Private equity firm El Caterton bought Thorne. Sanofi, the French company, bought Cunol ahead of spinning off their consumer health unit. And there were others. We've seen some very interesting transactions at great valuations that have occurred over the last 3 years, but it's definitely been slower. So that leads us to where we are today. Coming into 2025, M&A practitioners, private equity practitioners, large corporates, all anticipated a much higher level of M&A in 2025. And certainly in Q1, there was a lot of preparation going on for more activity this year. And suddenly, Mr. Trump decides it's time to raise tariffs on our friends and neighbors all over the world and in our more distant countries. And that's obviously had a big ripple effect on psychology and on financial markets. We've all been watching the stock market the last 5 or 6 business days. Most of us are glued to it. And it's been a roller coaster ride that makes one queasy. We'll be up 10% one day, down 4% the next. Mr. Trump has paused tariffs for 90 days, as you know, except for China. But what he hasn't done is provided long-term certainty yet. And that's part of his strategy to reset the world trade order, which is what he wants to do. And so M&A does not do well in a world of uncertainty. M&A does well even when things are less good. M&A can do well if we have certainty, if we're able to put a box around the implications of policy or geopolitical events. Right now, we can't put a box around that. If I'm representing a company and their EBITDA is 100 million and their input costs are 20 million, their raw material input costs, if they're all coming from China, that's a $20 million plus hit given 145% tariffs, more than 20. And so you understand the math. And it's very hard to sell a company if a buyer can't even articulate what earnings are right now. On top of that, with tariffs, prices will go up for a business. And so we don't have any idea how to predict, will that impact consumer demand? Take an iPhone, for example. The price of the iPhone, I saw on the news, some people said it's going to go up to $3,000. Are people going to stop buying iPhones? So we don't know the consumer impact of the tariffs. And so this level of uncertainty is not great for M&A. There are transactions that are pressing forward. Our friends out there tell us they want to proceed with looking at transactions, but they're going to proceed with caution in the short term, and they're going to want to understand the implications of the tariffs on any given business. A really good example, KKR just announced in Europe, in the consumer health world, the acquisition of Caro Healthcare from EQT, a very large transaction for a private equity firm, but KKR proceeded and announced that transaction in the middle of the current tariff noise, in the middle of Trump's announcements. So kudos to KKR for plowing forward and doing that. I think that's certainly good for M&A. Obviously, I'm an M&A optimist. I've been doing this for 27 years then. I've done this through COVID. I've done this through the 08-09 financial crisis. US and global capitalism is incredibly resilient. And so when you've had the advantage of being more seasoned like you and I, you remain optimistic, and this is just a short-term slowdown. It's a blip, and once it all settles down and settles out, we do expect M&A to continue its course.
Do you anticipate that because there's maybe this hiatus period or a little bit of slowing down, does that create pent-up demand so that when it rebounds out of this cycle, it actually accelerates even more than it otherwise would? Does that normally happen?
It does, Len. What's very interesting is you're going to have a sort of double pipeline now. If you think about what I said earlier, that M&A has been slower since 2021, you realize that there's more private equity capital out there today and owned businesses out there today than any point in history. On the one hand, not as many private equity businesses have cycled or been sold as should have been in the natural cycle of a fund life. And so you've got a backlog of companies that private equity firms would like to sell to return capital to their limited partners. And on the other side, you've got a huge war chest of private equity committed funds out there that wants to put more capital to work. And so, yes, we believe that when the gates open properly, that the gates will really open. And we were hoping that might be in 2025, and the tariffs, I said, have delayed that somewhat. We'll see for how long. But yes, we do expect the floodgates to open once we're back to some more normal levels.
Got it. So this next question is maybe a little bit too specific, but when it comes to interest in companies, let's say acquiring an India business, is it necessary that they have some global reach, or is a domestic India business, currently domestic India business, still interesting?
Oh, I believe that a domestic Indian business would be very interesting to a corporation or a private equity firm that thematically likes India. If you have made a decision that you want to play the India market and all of the trends we talked about earlier, you would almost rather acquire a 100% domestic Indian brand on the branded side than an Indian brand that's selling in 17 countries. Buyers generally like focus, Len. There's less complexity in that, there's more focus, and thematically, it's what you're trying to buy. You're trying to buy India.
Got it. So, question. Is there such a thing as a unicorn opportunity? And what are the composition parts of that? So,
Len, I had to go to ChatGPT earlier today because as I think about unicorns, I hear the name thrown around, and I really wanted to see what ChatGPT would tell me, what AI would tell me. And it said that in business, a unicorn refers to a privately held startup company that has reached a valuation of 1 billion or more before going public or being acquired. The term was actually created by a venture capitalist in 2013. So that's sort of the specific name, but why unicorn? Because they're so rare, we hardly ever see them. They may exist, they may not. And so, are there any true unicorns? And is the question, are there any unicorns in India? Is that the question?
That is the question.
Well, I mean, I did do a bit of research, Len, and again, I think within the nutraceutical industry, the industry really needs to mature further before we're going to see some unicorns, some real breakouts in nutraceuticals. A lot of the top brands in India today are either owned by the MLMs, Herbalife and Amway with Nutrilite, or some of the larger FMCGs like Dabur. You have yet to see breakout entrepreneurial businesses on the branded side break through to unicorn status like you do see in the US. And there's quite a few of them in the US, even in our industry. I named a few earlier, Liquid IV and Ollie and others. Having said that, I did find a company called Mama Earth. It's an Indian brand. It's not necessarily nutraceuticals, but it's related. Natural and toxin-free personal care products for babies, children, and adults. A lot of it is sold online. Now, this is the type of profile company that does get unicorn status in markets, and I think it's a matter of time if they can do it in personal care before we see it in nutraceuticals. So I think there's a tremendous opportunity for entrepreneurs in India right now to be thinking about creating the next unicorn. Mama Earth actually combines the principles of Ayurveda with modern science to deliver their products. I think that India's heritage with Ayurveda, which literally means the science of earth, lends itself very well to the nutraceutical industry and the emerging consumer demand that you can have for nutraceutical products.
Thanks very much. I'd like to dig in a little bit more to the Ayurvedic traditional medicines approach. Obviously, there's going to be translation challenges because it's a very strong cultural thing. Is the opportunity greater than the challenge? Like, is the Ayurvedic tradition going to add significant value to the India proposition, basically there domestically as well as globally?
I believe it will, and I think India has this incredible foundation of Ayurvedic tradition off which to build and educate around nutritional wellness products and prevention and healthy lifestyle. So I think it will help. We saw the same thing with TCM, traditional Chinese medicine in China, support the growth of the nutraceutical industry in China.
Excellent. I'm going to rhyme off a couple data points, and you've referred to a couple of things that need to happen in order for the Indian nutraceutical market to grow and mature. It's currently sitting at around 18 billion US. The aspirations are that by 2047, it's going to be a $100 billion marketplace. They've got an intermediate milestone 10 years from now of 68 billion. So that's a net of 50 billion. What are some of the implications of these projections, and what needs to happen urgently, in your opinion, for these aspirations to be met?
Len, first of all, I think those are reasonable projections. You know, it's always hard to predict the future, especially when it comes to numbers, and these are big numbers. But I come back to the size of the Indian population being 4.2 times the size of the US. I come back to a culture of entrepreneurialism in India. And I come back to that Ayurvedic tradition as well. I think that the Indian nutraceutical market does have that potential. So what needs to happen? Look, I don't think the private sector can do it alone. I don't think the government can do it alone. I think they need to work together to create a foundation urgently for this industry that lends this industry credibility both within India, with consumers, with corporations, and externally. And so what are the kinds of things I'm talking about? I'm talking about, you know, regulations around labels, regulations around manufacturing, regulations around good business practices, so that no one takes advantage of the industry, and that there is this level of credibility and trust around the industry internally and externally that makes it very investable. Western companies and investors won't come in unless they feel really good about the framework within which they're investing. And so I think it is, as I said before, it's up to the private sector in the nutraceutical industry to create trade groups that can work with government. I know that it's already happening, to really figure out what this framework is and what this foundational structure is that will best serve the industry going forward.
All right. As we begin to wrap up here, I know you're heading over to Mumbai. What's the message for the executive leadership that you're going to meet there as you head to the Nutrify Today Sunflex? My message is one of excitement. I want to congratulate them for what they're doing. I think they should be all in on the industry, and I think they should be already building bridges externally. They should be building bridges to the US, Europe, and other places globally, so that they can work with partners all over the world to make sure that they are thinking about trends, thinking about products, thinking about quality, thinking about efficacy and science, and really that they can build the industry to a place where it is seen on the global stage as a true leader. Excellent. And just in closing, I know you're very, very active in Vitamin Angels, and I know you just came back from a trip for Vitamin Angels. Let's talk a little bit, a couple seconds, about your work with Vitamin Angels. Oh, that's great, Len. It's something I love to talk about even more than my business at times. Vitamin Angels is a leading non-profit, non-government entity in the nutraceutical space. It's based in Santa Barbara, California. Vitamin Angels touches 70 million women and children around the world every year. They serve regions where women and children benefit from the support that Vitamin Angels can bring. Vitamin Angels operates through a network of partners in rural areas. I was just in Sierra Leone with them, and they are able to, number one, get nutritional interventions, so multivitamins, MMS, prenatal vitamins, deworming medicine, to these partners who are then able to distribute them in these areas. But Vitamin Angels is also doing much needed work in terms of impacting public health policy, working with governments. As I said before, the private sector can't do it alone, governments can't do it alone, NGOs can't do it alone, and Vitamin Angels is able to work with all three groups to impact public health policy in these countries all over the world, as well as provide nutritional interventions. But they are a fabulous organization. I'm a board member and a very proud supporter. Excellent, very worthwhile. William, I've enjoyed the dialogue. Look forward to seeing you in a couple of weeks. Thanks very much. Is there anything you'd like to say in closing here? Len, appreciate all you're doing for the industry. I think this is fantastic, and I'm looking forward very much to seeing you in Mumbai as well. Excellent. Very good. Thanks very much. That is a wrap. That's going to close us out with William Hood and the Nutrify Boardroom Series Indo-American version. Thank you very much.